Hi everyone, hope you're all doing well, and today we talk about the stock market recovery that's currently going on. Now obviously this isn't the market in general, but more focused at a lot of growth stocks, which I'm invested in quite a bit. I would say about half of my portfolio is in growth stocks. I know most of you guys that are investing as well, a lot of you guys are based in the growth stocks as well as being like a bit of a younger audience, and obviously it makes sense that when you guys are younger, when I'm younger as well, we're going to be a little bit more aggressive on our investments, and a good decent amount of the portfolio is going to be in growth stocks more than likely. It doesn't have to be, there's never anything wrong with being, 20s, 30s, 40s and being just a value investor or just being a dividend investor, but to get really decent returns, some of the times it's going to be more on the growth stocks rather than the value and dividend investing, and that's why most of us guys, of course, go into growth stocks. Most of us go into growth stocks. So yeah, we're going to be talking about this today, as it does look like there's a little bit of a recovery going on. But if you could smash the like button if you are new and you find this video useful, make sure to subscribe. Just to let you know, last night we did do a private Q&A on the Patreon, so if you do want to join that and rewatch that video, it is on there to join that. The link is in the description, and any future live streams that we do on the Patreon, we do some quite often, as well as loads of other things on there, then the link is in the description to join that. And if you do want to start investing, there's some links to some brokers in the description as well, like Freetrade. Now, getting on to the video today, talk about this stock market recovery. This is what you guys wanted to see on the poll. It was very close between the Beyond and Gang News and this one, so we'll talk about this one today, and then maybe later in the week, Thursday, Friday, we could talk maybe about Team 17 or 10x potentials of stocks, and there's a few other things I've got lined up, but let me know if there's any other ones in particular you want to see, and if it is very popular, I'll do them. But let's go on to today's video. So growth stocks do bounce back, and it seems like we kind of, I'm going to say this, actually I'm going to jump to the second point first, which is, let's not forget this still could go lower. This could still not be the bottom of what's currently happening, but the thing that I am going to consider is, look, a lot of these growth stocks at the moment, since February 2021, a lot of these growth stocks have some caps that are huge. A lot of these companies have lost nearly over half the value. And it depends which ones you look at, Teladoc, Palantir, Tattooed Chef, a lot of these small market cap companies have lost a lot of value. And to lose half your value is, pretty serious. Like, if you imagine if you had if you owned a house, and imagine your house lost half its value in 3 months, you'd be like, whoa. If you own your car, imagine if you bought a car for how much money, and then you found out in a few months afterwards it lost half its value. I mean, sometimes that naturally happens. As soon as you drive that car out of the showroom, it loses half its value. But generally, like, if you had an asset and it lost half its value that quickly, you'd be like, whoa. And it was a big, massive drop. So I am going to say this here, like, don't get too carried away, because it could still go lower. You never know where the bottom is. But what we have seen is quite a bit of a sharp rebound, and I bet a few of you guys, as well as me, had a bit of a look in the portfolio for the first time for a week and went, okay, that's not looking as bad now. And like a lot of my positions as well, like most of my positions now are actually break even, or obviously there's the longer term ones that are still doing fantastic, but a lot of the new blood in the portfolio, which I was buying over the last few months, obviously that got hurt quite heavy, but a lot of that's like break even now, or even up on the positions. So there is a strong rebound going on at the moment, as well as other stocks that I don't own, but they are starting to bounce back. And there's never a thing that comes out and goes, this is what caused the actual sell-off, but it does seem like, obviously the big cause was the valuations, and then from the valuations we had the rotation into crypto, which now it looks like growth stocks are coming back and crypto is actually rotating out of favor a little bit, so you could say that was something. Obviously there was the inflation fears, and that's kind of dived down now that the stocks are going back up again. But like I've always said before, when stocks go down, people do look for reasons of going, that's the reason why it goes down. I always said, like, yeah, it might have some little effects, but we knew this was happening. We knew it was going to happen, and I don't know about that one exactly. And then there was also the sell in May and go away, and it does seem like some of the funds were taking that little profit, tax year coming up, pay off some of these taxes for the amazing gains that we had in 2020, and go again now and put the money back in, and a little rotation in the sector wise. And I think all of that did come together, like I said previously on the video, is like, when I think about the root cause of what caused this drop off, I don't think it was one thing. I think it was all them kind of things that I just said all coming together, and that's what's caused it. But it was a tough time. The last kind of few months have been very tough. Like I said, it might not be the end of it, but what is kind of looking, how low we went, the rebound we have had, I don't know. It does seem like a bit of a leveling out a little bit now, and there's money coming back in, which we didn't have before. Like before, it was just day after day, sell, which is actually pretty good, because then we get the stock market probably go lower than what it would do if it was just a slow sell-off, where you flush all them sellers out and get to the bottom quicker. And also it would probably go lower than what it would if it was a slow sell-off. So yeah, it works in our favour actually. But just for how quick it was, I think it is about where we are at the bottom, but we never know what happens. But this time was really tricky, a lot of new investors that have come into the stock market. I mean, a lot of new investors might have basically got involved in the CV dip, but what happened when the CV dip is people bought, if let's say we had this was a CV dip and then we had the recovery that happened, most people actually started investing, in this area. So they kind of got the benefit of basically seeing the stocks recover and saw like, oh, so if I buy on the dip, it does work. I do make more money buying on the dip. But the only problem is a lot of the new investors that were involved in the stock market, they've never been through that situation, the other side of it, where you kind of have to have your emotions in check, and it's like, you're going on, it's down, and having you disconnect from the stock market, the emotions of going down, and not getting involved in that, and keep thinking that this day will come. It's a total different situation. Buying here and being new and seeing that, you're like, oh, this is amazing. Oh, of course you're buying the dip. But the real big test is when you're on the other side of it and it's going down and down. And eventually when you get to that point, it does feel quite good when you're like, okay, we made it through the other side. But this is the big test when you're on the side, the bad side of the dip, when you're actually holding it through the dip. And I think like a lot of people that got invested recently in the last kind of 2020, when we had the CV dip, I think a lot of people might have benefited from this side of it, but this side of it is a total different story, and that is the big test. That is a really big test, and I think this was the first time for since the CV dip, unless you was in before the CV dip, where that was the last test of like the awful feeling. And most people got this side of it, but they didn't do this side of it. And I think that the last kind of few months was this side of it, and I think few people will feel better for that. It will make you stronger as an investor. It will make you stronger that when you see this happen again, you will be even more confident that you were that you made it through. Don't get me wrong, there was people in there were people in February, March, April, that it was the first time going through this. They only felt this. Maybe they even missed the big rally and only got around at this part of it, or even bought at the top of the 52-week highs. And a lot of these people haven't made it through. And you won't hear from these guys. No one's going to say, oh yeah, I quit the stock market. No one's going to be doing that, but a few people will have left. And what I'll do is I'll let you into a little bit of a secret, is that I see this on the Patreon. The most people that have left the Patreon are people that joined in February at 52-week highs, and the market's gone down and down, and they're just gone, this isn't for me. And sure, bad timing that they did get in at 52-week highs, but that's they just haven't made it through emotionally, and that's what happens in 2 months. This is why the stock market is a great way for making wealth, but you need to have patience. You can't go in thinking you're going to be a millionaire overnight. And as well as that, through the YouTube scene, I've spoken to quite a few other creators and say like, not many people are watching stock market videos as they're doing, going into November, December. Obviously before that we had the CV side of it, but even November, December, January, maybe in February. But you know what happened in March and April? You could kind of say things are opening back up again, but the views have died down as well, because people are kind of leaving the stock market. And I even saw this on the YouTube scene side of it. There's a lot of creators. You know what happened in March, April, even May? You know what happened on that side of it? A lot of people that used to upload their portfolio and go, look at all these amazing gains, I'm an amazing investor. They stopped doing portfolio updates, and that's why I always say, I'm not, saying it out there to like show off, but when the stock market goes down, I will always show my portfolio, and when the stock market goes up, I will always show my portfolio, and I'll always be here. Just getting a little bit off topic there, but this is what I mean. There's even on the YouTube scene, a lot of the newer creators that got into this, they disappeared off the scene. They stopped making videos. And this was our first little test, and you can see the little cracks there. Imagine if we have like this sort of situation across a 12 months period, across a 24 months period. And this little 2 months period was a bit of a reality check of, this is the other side of the market, and you kind of saw a few cracks there with a few people. Now, that kind of went on to the next question, is did you buy the dip? Now, obviously, if you bought the dip, you probably these few days probably felt really good. And if you were able to average in quite well and get good averages, you'll appreciate this dip now because you'll have lower averages. And what that will also mean is if you have lower averages now, you will actually go make more and more money. So if you had a stock with a $60 average and now your average is $40, when it gets to $100, you make even more money. You're making over 100%, 150%. Whereas if it was 60, you're not even making 100% on that stock. So you're going to make more money buying on these dips, and it does feel better. Now it's probably the time where you got to start thinking, okay, now the market's going up, start doing the opposite. What's going on? Start thinking about, okay, is there anything I need to sell? Is there something where I need to get my cash pile back up? Is there some positions that I've been averaging into very heavy that I need to kind of, I averaged into that heavy, I've done my job, I've got my average lower, okay, my positions break even or even a little bit of a profit. Let's just correct that position a little bit. Those are the sort of things you want to be going on. But that's the thing, is if you bought the dip, you're probably kind of feeling pretty good right now. Because one thing what happens with buying the dip is, if I could just rub this off here, let's say we have the dip here and then the stock goes up. Quite often what people do is they think when they enter a company, when they buy a company or when they buy the company on the dip, they need to buy the company like here, and they need to have their average somewhere around that range. When you buy a company, if you're a long-term investor, your aim is just to make good money over a long-term basis, 100%. It doesn't matter if it's 100% or 110%, as long as you make a good chunk of money, don't get too caught up on, okay, I could make 10% more, I could make 20% more, I could make 30% more. As long as you make good chunks of money, don't get too hung up on that. And I think that's what happens. Sometimes people think that when they buy the dip, that's what they need to do, is they need to have an amazing average down here. Okay, it's not about having an amazing average, it's just about making good amounts of money. You make good amounts of money, you're going to be happy because you can go buy more stocks, invest in more companies, or even treat yourself. And all you need to do is when you buy on the dip, is you just need to be in that range. As long as you're in that range, let me just put a bit more stock chat. As long as you're in that range, or even a bit more than that, that was a bit harsh actually. But as long as you're in that range, somewhere around this average up here, or you even get it on the way up a little bit, if you're not exactly at the bottom or you're roughly up, as long as you keep averaging and you get somewhere in that range, you'll have all this wave to ride up, and you'll still make a lot of money. Sometimes that's what happens, and as long as you're in that range right now, and this is why you also can't time the market, is that you look at the last few days, bang, we're back up again. Most of my companies that I've been averaging into, like Beyond Meat, I was down on Beyond Meat like 17% at one point. I'm now down 2%, and that's why you can't wait exactly for the bottom, because literally, boom, out there, you're back at break even, you miss the jump, and that can happen so quick, and that's only a few days time, and that's why you're just best at averaging, and like I say, as long as you get great companies in a decent lowish range, then you'll do well. So yeah, that's just a little bit on buying the dip and all that, and the rewards as well of buying the dip. That buying the dip is a great thing in the short term, because like I said with the example of getting your average from a $60 down to $40, the bigger upside you do have on that company anyway. So yeah, just a few things to talk about on the stock market recovery. I hope you enjoyed it. If you could smash the like button, if you're new, subscribe, and also let me know what videos you want to see going forward as well. But that's enough talking for today, and I'll see you in the next video.